Japanese yen analysis. New year, same trend as USDJPY breaks 2021 peak. Japanese yen price analysis and news. A new year, however, some trends seen at the back of last year remain. Equity markets have been off to a flyer with fresh record highs in the US, in which the tech giant, Apple, became the first company to reach the $3 trillion market cap milestone. Across the FX space, Japanese yen selling showed little signs of abating, having come off the back from its worst performance against the USD since 2014. US dollar to Japanese yen is now at its highest level since January 2017, after tripping stops through 115.50 overnight amid the surge higher in US yield. That said, while higher yields and equities have weighed on JPY, the view of market participants favoring those currencies where central banks are looking to raise rates over low yielders are also at work, with cross-yen notably firmer. Japanese yen performance versus US dollar. Source: Refinitiv. Taking a look at US dollar to Japanese yen on the tech front, the daily RSI is back in overbought territory. Although, given the occurrence of this over the past year, this would unlikely be sufficient enough to indicate a potential pullback in the pair. US dollar to Japanese yen overbought, but far from the extreme. Source: Refinitiv. As such, despite the bearish RSI divergence, the RSI is far from extreme conditions. While I would need to see US yields soften in order to increase my conviction in expecting a dip in US dollar to Japanese yen, and instead would pay closer attention to the weekly RSI. A reminder that US dollar to Japanese yen is among the closest correlated FX pairs to US yields, and therefore, it pays to keep a close eye on US fixed income. US dollar to Japanese yen versus US 10 years yield 60-day correlation. Source: Refinitiv, Daily FX.